Hey guys, welcome back to the channel. Today I'm going to be discussing this rainbow logarithmic regression curve indicator that I have created to help identify where the bear market bottom could potentially be. So if you're new to the channel and you want to show some support, please leave a like and subscribe. So we have these logarithmic curves here which I have color coded to help visualize the price action today in relation to prior cycles. Currently we are at this green bluish line at around $20,000, and to me, when I see these logarithmic curves, I immediately think about going back to the prior bear markets to see where the bottom corresponded in relation to where we are today. So if we go back to the 2015 bear market bottom, we can see how the bottom from a candle closing perspective corresponded to the regression curves just below the one we're at today and at this lighter blue one. So the lighter blue curve also corresponded to the bottom in the 2018 bear market, and currently that curve is around $15,500. But keep in mind it is going to continuously increase as time goes on. I think there's a pretty consistent pattern here with these bear market bottoms, where we see from a candle closing perspective, the bottoms do correspond to this lighter blue line, but we can see some wicks below this curve to the blue and darker blue ones. So if I just highlight those, we can see how in 2015, this January phase, we had a wick all the way down to the next one. And then if we go to 2018, we had a few candle closes just below it here, but ultimately I'm talking about this March 2020 capitulation where we went all the way down to this darker blue curve. But this low here at $3,800 did correspond to a higher level than the previous lows, even though it was at a lower regression. And that's because, again, these are increasing and they will continuously increase as time goes on. So we can also see the time it takes us to form a cycle bottom following the break of this green curve in the middle. So if I take a measured move of the 2015 bear market bottom, we can see how following the break of this, it was approximately another 58% down over the following 112 days. And then if we go to the 2018 bear market bottom, we can see how we broke it in June of 2018, and the bottom was about 52% lower, 53% lower over the next 175 days. So if we take a measure move of where we are today, we can see how we are about 49% down over 56 days. So to me, I'm thinking that, given how we're already this far down, you could make the comparison that, these two are diminishing in the overall drawdown. So this one was a 5% decrease from the previous one. So we had 58% drawdown and then a 53% drawdown. If we go another 5%, that would be 48%, which is where we are today. And we can see how the time it takes from where we broke the green line to the bottom is also increasing. So we have 112 days from this level here to where we bottomed, and then we have 175 days. So I think in general, I am expecting a bottom towards the end of Q4. So if we go out, say 200 days, following this general pattern where it is increasing, if we go out 200 days, that would correspond to a bottom in November. If we were to say go out 250 days, that would correspond to a bottom at the end of December. So I think there's pretty sufficient evidence to say, anywhere from anywhere in Q4 really is a pretty solid estimate as to where the Bitcoin bottom will be. Excuse me, when the Bitcoin bottom will be. And I think where it will be is most likely going to be between $14,000 and $16,000. So I want to start by considering how, if we extend this blue line here out, because I do think the bottom will correspond to around the blue line as with the prior bear markets. So if we extend this out here, maybe to the end of this year, where I do expect the bottom to be, we can see how that corresponds to around $17,000, $18,000. And this makes sense to me because we could see, from a candle closing perspective, we could have a candle close that bottoms around $18,000, but a wick that maybe goes down towards, say, $15,000 or just a little bit below. We can take a measure move of the prior declines on these wicks. So we had the candle close on this blue line here, and then the wick went down about 19 or 20%. So if we take a measure move about 19 or 20% from where this blue line here will be towards the end of the year, it will be around, say, $14,000. And I think that's a pretty consistent measure, especially given how if we take out the 300-week simple moving average, we can see how, currently the 300-week simple moving average is about $16,600. And this was the bottom here in March of 2020. And prior to that, we had never seen a test of this level before in Bitcoin's history. So overall, I think there's a lot of indicators sort of having this confluence and pointing towards the same thing of maybe a bottom around $15,000 plus or minus a few percent. And I would expect that to be towards the end of this year. And I think the 300-week simple moving average is probably a great measure because historically, if I pull up the 200-week simple moving average, we can see how the bottoms have corresponded to the 200-week. But considering how Bitcoin has diminishing volatility and diminishing returns, we could expect that maybe we have the bottom this bear market around the 300-week simple moving average and potentially a brief wick below it. But ultimately, I think that would be short-lived and pretty brief in general. So that's the end of my analysis on Bitcoin with these logarithmic curves. I hope you guys did enjoy. I would really appreciate any feedback, suggestions, or comments you guys have, so please leave those below. And as always, I will see you in the next one.